want to welcome you especially to today's weekly review. Quickly, we're going to review the markets and all that we did in the course of the week, and we're going to look at the few entries that we made. So here's our chart, and we had a very beautiful week. I'm waiting for my network to bring out the full details of the chart. It was a very productive week, as we had most of our entries hit take profit. Then of course I know we have some people who are actually joining this particular weekly review session for the first time, and because of them, I'll just give a preamble. We will normally take our analysis from the 1 week time frame, and it is from that time frame that we usually look at price action lines first before trend lines. Okay, then the trend line for 1 week and 24 hours is the same, so we don't draw a trend line here. We only just take a few price actions, of which we go straight to a 4 hours time frame, and we turn on session breaks just for us to identify the day, the beginning of the day, of the week, and the closing of the week. Of course, beginning of the day, closing of the day, beginning of the week, closing of the week. So that helps us to spot the first two candles that begins the week. The high of the candle gives us the buy region, and then the low gives us the sell region. Okay, so for the buy region we go for long buys, short sells. For sell regions we go for long sells and short buys. So it's after that we take the liquidity grab. Okay, so we spot the sell stop liquidity and the buy stop liquidity, which is upward. Then we take trend lines. The trend line for 4 hours and 1 hour is the same. So for 1 hour we don't necessarily take trend line, we just take price actions. For 4 hours also we take price actions. So after the price actions for 1 hour time frame, we just go straight to 15 minutes where we take our entries. So now I'm going to show you how we took some few entries, so you can be able to learn something from it. So the first entry we took, the first entry we took was on Monday morning, and this was the first entry, and we usually have various factors which we use as our reasons for taking these entries. The first one is news, trend lines, psychological level, price actions, volume, pattern, and region. So if we're looking at news, what we pay attention to is we want to be sure that there is no upcoming news which will have high impact on our entry. Most times the news manipulates entries. So our first entry is this. Okay, we looked at psychological level, we looked at price action. Okay, of course this signal of premium and discount zone was here, as at that time it moves as the time moves and as prices move. So, and we had our confluence, which is all of these factors plus pattern, giving us an indication that we should go bullish. So, and we did not quite achieve a successful long bull. We only got 15 pips or thereabout, and then we observed that there was going to be an inducement. This is something I've been drawing attention to most traders. Inducement is usually the problem in trading. What leads to inducement? Inducement can arise as a result of the fact that especially when liquidity has not been fully grabbed. Like in this case, liquidity seemed to be here and here. For someone who waits for price to get here before going bullish, must have caught several pips, and that was what we missed because we got induced here. So we went out by taking partials at equilibrium. and price got induced. Inducements is not my confirmed entry for a bearish move. This is something that every trader must pay attention to. There are key factors I pay attention to, especially as a smart trader, that confirms my entry. And one of such is, once I see a change of character, I'm waiting for a break of structure, I take my entry from the fair value gap of the break of structure. Okay, now the reason I didn't take this first was I was waiting for London Keep Zone. Okay, no, this was what I took. And this was first break of structure, second break of structure. The second one tested at the fair value gap, which was my entry. That's what confirms my entry. Now, if price does not continue going bullish, what it means is that particular entry has ended. I cannot decide to go bearish just like that. I have to have key factors indicating I should go bearish before I go bearish. This is something every trader must learn. Except you get to function like this, you have issues. Attention to look out for when price is not giving your confirmation. Once price is not giving your confirmation, you are not supposed to go in. There is no confirmation here. This is an equal high. Sorry, this is a change of character. So if I'm going to go bearish, then I must be done with this bullish move, because we kept on waiting for this bullish move before it gave an equal high. So it's after this change of character I might be willing to go in, but I might not want to go in until a break of structure because of fake change of characters. Because you might decide to go in for a bearish move, and after you enter, price might now decide to go bullish, because change of character and another change of character is range. For instance, this is change of character, this is change of character, this is change of character, this is change of character. So the only thing that tells you that after this particular change of character we're going to go probably bullish or bearish most times is after you see a break of structure. For instance, this first one confirms a change of character. Okay, then price got retested. This is a good bull move before the break of structure. Now this is not a valid break of structure, because you would have thought after this break of structure, this bullish break of structure, price was going to go bullish, and after that you find price declining. This is inducement. So when you find that price is at a particular liquidity grab and you are planning to go bullish, you might be making the wrong decision. So if you are considering a break of structure, maybe a bullish break of structure, it shouldn't be on an induce on a liquidity, otherwise you suffer inducement. So that's part of the things we considered here. Same thing here. Okay, this first was we considered this a liquidity grab. Price got here and went straight to TP, looking at many other factors. And there was a break of structure here which gave us another entry. So if you look very well, you see that we had two entries, this first one, this second one. This second one didn't really hit TP, it reversed, and we take a bull. Okay, so any move you see me take, if you look closely, you see that I had confirmations to take this trade. Then I was using proper risk management, and one of the proper risk management is breaking even and securing profit. So that's how all these entries were made. Then we had this one, same thing. This one hit TP, this one hit TP, this did not hit TP, and this was very close. So this is the biggest of all, because this is 150. This is 50, right? This is 50, 100. Then this is about 5, and this is about 45 thereabouts. So these are about 150 pips. Beautiful entry. So with the few things I've explained to you, try and pay attention to our weekly analysis on Monday morning 6 a.m. where I will now be able to explain some few details to you. Then if it's still not very clear about some of our strategies, then you need to subscribe to our YouTube channel and watch our video on the best day trading strategy and some of the few analysis we've done in the previous past to see if you can be able to catch up. Otherwise, then go for our free class, which is also uploaded on YouTube. See you on Monday. Bye.